Good afternoon, good morning, wherever you are in the world, and welcome to our virtual event entitled Managing Exposure, How Nature Loss Will Create Opportunities and Risks for Africa's Financial Sector. My name is Mark Napier. I'm your facilitator for this event. I'm the CEO of FSD Africa, whose purpose is to make finance work for Africa's future. In other words, to help underwrite a sustainable future for Africa by contributing to the development of financial markets. FSD Africa's funding comes very largely from the UK government, which in its recently published international development strategy has reaffirmed its commitment to tackling climate change and protecting nature, including the very worrying issue of biodiversity loss. I want to thank in advance the UK's Department for Environment, Food and Rural Affairs for funding the programme that has led to this research. And I want to thank our partners at Vivid and McKinsey for their work on this. And I particularly want to thank you, our online audience, for giving up your time to join this session. As we know, Africa is richly endowed with natural capital and is home to some of the most important biodiversity hotspots on the planet. A vast proportion of Africa's economy and employment revolves around nature. In fact, we can fairly say that natural capital underpins the future of Africa like no other continent. And we must remember that Africa will be home to a quarter of the world's population by 2050. So it would have been a travesty for African institutions and governments not to be centrally involved in the development of the TNFD framework, the Taskforce on Nature-Based Financial Disclosures, which seeks to reset the relationship between finance and nature globally, such that lending and investment do no harm to nature and are in fact nature positive. As you will hear, it's a massive and complex topic, and I'm thrilled we have such excellent speakers to help us unpack the issues. During this webinar, there will be a short presentation of the research highlights and then a panel discussion. And we'll also finish with a very short intro to the African Natural Capital Alliance, which is the advocacy platform that we hope will take forward this important work. Please don't hesitate to use the chat to pose your questions. My job is to try to ensure that we leave enough time for the panelists to answer these. If I fail in my duty, I will get back to you. We will get back to you with some written answers. So to start us off, we're very honored to welcome one of the co-chairs of TNFD, Elizabeth Mrema, to give some brief opening remarks and locate this research in the broader context of where TNFD is today and where it's heading. Elizabeth, over to you. Thank you very much.
Thank you very much, Mark, and thank you very much for this opportunity to speak, especially me, myself, coming from this region in Africa, and the topic obviously will equally be dear to be reflected and benefit the continent. Greetings to all the participants in this important topic, how nature loss will create opportunities as well as risks for Africa's financial sector. And thank you for the opportunity to speak with you and share a few thoughts this morning. Halting and reversing nature loss across Africa and the rest of the world is a commercial and moral imperative, and it cannot wait. Having worked for decades to protect and restore nature while seeing the continued destruction of ocean, mangroves, forests around the world, despite our efforts, I must admit that I have at times questioned myself whether we can ever succeed. But over the last year, I've seen an incredible rise in willingness across the private sector all around the world to apply their resources to solve this challenge. Today's event and report launch is yet another reminder of this, and it makes me optimistic that we can indeed create societies, economies, and financial systems that work both for nature and for people. However, it is easy to agree that it's worthwhile to shift financial flows to activities that protect nature instead of those that destroy it. The challenge is how to do it in practice. Bringing nature into financial decision-making is a complex task, especially as it needs to happen in tandem with doing the same for climate and considering other social and economic challenges which we must continue to grapple with. Looking at Africa specifically, as much as 62% of the continent's GDP comes from sectors that depend significantly on nature and significantly higher than the global average. At the same time, Africa is experiencing the results of nature loss. Just look at the soil. Africa is the most affected region globally when it comes to land degradation. Water risks in many African countries is also the highest in the world, although it is highly location specific. Africa's biodiversity has declined by 65% since 1970. And of course, Africa is an incredibly diverse continent. Not all African countries or even regions within those countries are exposed to nature loss and associated financial risks to the same extent, but it is clear that the impacts and dependencies on nature require urgent action. Just over a year ago, we launched the Taskforce on Nature-Related Financial Disclosure, or TNFD, which I'm honored to co-chair. Our mission is to develop and deliver a global framework for managing and reporting on nature-related risks and opportunities that in turn can facilitate a shift in financial flows from nature-negative outcomes to nature-positive outcomes. And I am pleased to see the interest we receive both from the market participants, stakeholders, as well as regulatory bodies. We have just seen our TNFD forum membership grew to 500 currently, which includes several Africa-based organizations such as FSD Africa and our task force member, First Round. And we recently have also received further endorsement by the government of G7 and G20. I'm currently speaking from Nairobi, where, as I speak, behind me, parties to the Convention on Biological Diversity and parties to it and other stakeholders are negotiating the post-2020 Global Biodiversity Framework. And one of the draft targets under discussion is exactly what we are talking, inviting the private sector, business, financial institutions to be able to assess the risks and the impacts of their businesses on nature, and also the opportunities and those dependencies to be able to be reviewed and disclosed and be included within your decision-making processes. So the regulators are already looking at you to contribute to that. However, to succeed on our mission, we need to build a practical framework that can be implemented by organizations across all regions of the world. And as you know, location specificity is a key feature of the nature-related risks. It is therefore that TNFD has adopted an open, innovation approach. At the center of this approach is realizing multiple prototypes of the framework that financial institutions and companies can test and provide us with their feedback. We delivered the first prototype of this framework way back in March, and actually next week, we will release a second iteration, which hopefully will have built those feedback we have been able to receive in the last few months, as well as to fill in the gaps of the work which was still undergoing within the task force itself, which could not feature in the first, the release in March. Our framework especially needs to work for those operating in and investing in countries and regions rich in nature, and that rely heavily on natural resources for their economies. And Africa falls squarely into both of these categories. This is why pilot testing the TNFD framework across different countries in Africa, as well as the rest of the world, is a critical priority for us. We need financial institutions and companies in many locations, sectors, and financial systems to help us test our suggestions so that together we can create a practical, science-based, and scalable framework. We are grateful to FSD Africa and the New Africa Natural Capital Alliance for becoming a TNFD piloting partner and stepping up to pilot testing with a range of financial institutions across Africa. On behalf of the task force, I reiterate an invitation to each of the Africa's natural and financial landscape. And as this report and this webinar suggests, looking at your impact and dependencies on nature, it is not just about risk, but also about opportunity. Together, we can shift financial flows so that they serve nature-positive outcomes in Africa and beyond. Thank you very much. Back to you, Mark.
Elizabeth, thank you for that rousing, particularly the rousing closing comments. Much appreciated. Just to pick out a couple of the points that Elizabeth was making, the need to do the same for nature as we have been doing for climate, a complex issue. I hope Madeline might pick up on that comment in just a minute. The fact that we have more than 500 members of TNFD globally now, which is incredibly exciting, and many congratulations on that. And then the need for the practical framework, the practicality of the framework, and therefore the need to pilot for that as well. So thank you, Elizabeth, so much, and very best of luck with the Nairobi negotiations, and we look forward to the outcomes from that. Many thanks indeed. I'm going to hand over now to Robin Smale, who is a director and a co-founder of Vivid Economics, has been leading the team on the research. Robin's going to introduce the highlights of the research itself. Thank you, Robin. The floor is yours.
Thanks very much, Mark. I'm delighted to show you the findings from the work that we've been doing in collaboration with FSD Africa. And I'd like to acknowledge the hard work that the project manager, Charlie Dixon, has put into this, and the team of Alina Steinweg and Pierre-Louis Lostis, and our partners at the Natural History Museum at Euro Alpha, who've made this all possible. So we go to the next slide, and I'll show you what this builds on. This is not just our work, but it's building on the pioneering work on stress testing of nature, which the central banks in France and the Netherlands have done. It builds on the original TCFD work, the Taskforce on Climate-related Financial Disclosures, and the more recent work of the Taskforce on Nature-related Financial Disclosures, which Elizabeth was describing to us a few minutes ago, and its LEAP framework, which is locate, evaluate, assess, and then prepare to respond. And we take the first three of those letters and develop them in this analysis and apply it to private financial institutions' portfolios. We thank those banks and others that have been working with us very much for their support and their engagement in this project. It's made it possible. And we also apply international financial systems. So thank you to the central banks that have been involved too. And you'll see some of the results in the next few slides. What does this show us? Well, it shows us it's possible to do this now. The framework that the TNFD has produced is in fact implementable, and we hope you're really interested in the results. So if you go to the next slide, we'll start by just refreshing our memories on what's driving this. So in the first part, we see well, the three categories of drivers here. The first part is trends in nature and tipping points in markets, just to illustrate one of those being water, where 30% of African countries water stress becomes a strategic issue as we go forward in time. In order to solve for a healthy natural environment and sustaining biodiversity, we will need to make adjustments to how we manage land. That includes intensification of agriculture in some places. It includes pulling back from the use of land for agriculture and reforesting in other places, to give examples. And there will costs of this. And some of those costs will flow through to consumers, and some will be borne by the businesses that are working in those areas. And what this analysis does is it translates those constraints and objectives into costs, and then passes them through to consumers and works out how much is borne by businesses. The other aspect of this is a shift on the demand side. So on the demand side, we expect to see changes in diet, changes in food waste, and other things that will create opportunities, for example, in alternative proteins, but also modify the expected appetite for buying agricultural crops of various types. These are the things which will flow through into the analysis. So let's have a look at the first results. We're going to start with profits, which of course affect the equity valuation. So here we look at profits, and we're going to compare the profits of two sectors, extractives, mining and so on, and agriculture, which are two of the most exposed to nature risks. And we'll compare them to a number of sectors, extractives, manufacturing, chemicals, and oil and gas, but the climate risks. So in the black, you see the nature-related risks here, and in the blue, estimates of the climate-related risks. What the takeaway from this slide is that in 2050, the impact on profits of 15 to 20% in these most exposed sectors from nature is similar in magnitude to the impacts of climate on manufacturing, chemicals, and extractives, which are fairly climate-intensive industries or carbon-intensive industries. Oil and gas is a bit of an outlier because it's very greenhouse gas intensive. So that's positions nature risks in the same category, if you like, of risks as climate, and makes a powerful argument for including them in stress testing. By 2030, we expect the risks to be a little lower, and you'll see in the box in the bottom left-hand corner, something between 1% and 3% is our best estimate at the moment of the impact on profits in 2030. So if we go to the next slide, the other side of the coin we want to look at today is the impact on loans and lending. And here we show a comparison between the nature-related losses from loans, the percentage value of a loan book, which is likely to be lost, in agriculture, just the agriculture sector, which is the most exposed. We compare that with typical losses in a loan book, which is the 3.9% figure. And as you move across this chart, you can see different geographies. So you can see entire country financial systems, country by country, and you can see particular banks' loan books. And the results we're getting here are that in some cases, the losses, the loan book exposure in agriculture can be as large from nature risk as all other risks put together. In other words, the size of the blue bar is as large as the size of the black bar. And that's not the case in all places, but it's the case in some locations where the crops and the agricultural practices are most exposed to changes associated with solving the nature problem. On the right-hand side, you'll see some opportunities, some blue bars that are above the line, the zero line on the chart, and that's because these supply side and demand side shifts to solve the nature problem are creating opportunities, particularly in providing crops that will go into the manufacture of alternative proteins. So there, in fact, is some increase in profitability and financial strength of companies there that reduces their likely loan losses. So we've just covered profits, and we just, for a number of sectors, compared them with the impact on profits of climate risk. And now we've done a drill down into the agriculture sector on the loan book. And what I'd like you to show you now is two slides which give you the whole portfolio view. So if we move on to the next one, we'll first look at equity portfolios. And here you can see the progression of value change in an equity portfolio over time from today through to 2050, with two markers at 2030 and at 2050. And there's quite a dispersion of impacts here across these local portfolios country by country, with an outlier down at the bottom with a 5% reduction in portfolio value in 2030 and then an 8% reduction in 2050. So that's a 1.5 times increase in the impact between 2030 and 2050, but others who are experiencing only a couple of % reduction in equity portfolio. And clearly that depends upon the weighting of the exposed sectors like agriculture and extractives within the portfolio, amongst other factors. And you can see that there's an example of a portfolio here where in fact it's gaining value. Let's have a look at the loan situation. So this next slide shows us the equivalent picture for expected losses or loan book change. And here we get a bigger effect as we roll the clock forward from 2030 to 2050. So if you look at the bottom line, 0.6% reduction in 2030 and up to 2.8% in 2050. So that's a more than threefold increase. But again, we have this dispersion with most portfolios being smaller. I'd like you to take away the view that this is a material impact now and is something that is worth considering alongside climate risk, and that it's actually possible to take these calculations right the way through to this endpoint where we understand the impacts of these risks and opportunities on loan books for particular financial institutions. I'm going to come to a close shortly, but if we move on to the next slide, I'd just like to reflect on the sorts of things that these findings mean for various parties. Let's start with the public and private financial institutions. It is now possible, as I hope you agree, to integrate nature into climate risk identification, the assessment of climate risks, and ultimately the management processes of those. And so that's something that I would expect financial institutions to start doing now and to become a widespread practice in the next 2 or 3 years. That will be particularly encouraged if regulators choose to integrate nature risk into their current stress testing and other supervisory frameworks. And TNFD is setting out how that might be done. I hope you can see here that we've demonstrated that it's a practical option. To understand risk in the long run is also to understand how the nature positive transition, the equivalent of the net zero transition, might unfold. And much of that lies at the hand of policymakers to determine what public policy might be in the future to provide the incentives and constraints within which the financial institutions and all these businesses will operate. And so there will be demands from financial institutions and these other people on this slide to ask policymakers what their ambition level is and how they propose they might implement public policy to bring it about. Those then can be brought into the analysis for risk assessment. And then finally, there is the important work of the TNFD and the various accounting bodies and others who will develop the standards which will enable this information to be digested and processed by many financial institutions in a common manner, such that it means the same thing to everybody and we can compare one against another. I'd like to thank you very much for your attention. I'll hand back to Mark.
Robin, thank you so much for distilling what's quite a complex picture into some takeaways that we can easily digest. There is lots in this report, and I do encourage everybody to download later and get into the detail of what the report is saying. But Robin, as a starter for 10, I think that was excellent. Thank you so much. I'm now going to hand to Madeleine Ronquest. We're going to start the sort of panel part of the discussion. Madeleine, you're the head of environmental, social and climate risk at First Round Group. I know that you are sitting with a beautiful TNFD seascape behind you, which is wonderful and very appropriate. I also know that you have a you're exposed to a nature-based risk in the form of South African power shortages. And there may be a little bit of a temporary hitch, but let's hope we get through your bit before the power outage happens. Madeleine, I'd like to ask you a question, if I may. Is nature-related financial risk something you think financial institutions are addressing or even need to, especially when, as we've seen from Robin's presentation, for many, their exposure to the most badly affected sectors, such as agriculture, is actually quite limited?
Yes, Mark, thanks for the opportunity. Yes, I think that African financial institutions should get more involved. I'm very grateful for the work that we've been doing with FSD Africa through UK Aid as well. We're very privileged to have been in that position. We did, on many occasions, reach out to other African financial institutions to try and get them on board as well. But I do think that there are some challenges for smaller banks specifically, which we can get to later. But I don't fully agree that exposure to agriculture is limited. For FirstRand specifically, our exposure is quite large. 30% of our commercial book is in agriculture. We have quite a footprint in sub-Saharan Africa, and everywhere we have an agricultural footprint in those portfolios. But more importantly, I think the underlying sectors like tourism, conservation, and species protection is really critical for Africa, because I think that is the basis of the economies of most of the countries below the Sahara. And the protection of those species and ecosystems is really critically important. And everybody knows about the game reserves and the rhinos and the protection and so on. So I don't have to go into that. But if you look at the state of development and industrializing countries, it is even more important for us to mitigate the risk at onset. So when we onboard new clients and managing the clients that we already have.
So looking at your own business then, Madeleine, how are you managing those risks? And do you think it's possible that they can be entirely offset by the opportunities in nature?
So on the first part of the question, I think the people within FirstRand is quite familiar with climate change, and they understand transition risk and physical risk. So what I'm doing a little bit sneakily is I'm leveraging off the climate nature nexus, because people already understand climate impact. I am in the unfortunate position where we can actually use case studies in South Africa of extreme weather events that impact natural capital, that in effect impacts the economy quite negatively. We have on the one side of the country severe droughts. We are nearing day zero in the Eastern Cape. I think it's a few days left before the taps get switched off. And then in the other parts of the country on the northeastern side, we've had severe floods and mudslides. So removing topsoil from agricultural land, causing pollutants to end up in streams, protected areas, and the ocean. So the conversation for me is easier, and especially if I attach it to tourism and conservation. And then food security and food and beverage processing. And then I think the other sector that we are looking at is the textile industry, where there's still a lot of waste. My conversation also includes the circular economy, avoiding waste, repurposing, reusing, so that natural capital goes back into the place where it basically belongs. And that doesn't mean landfill. And then in terms of the second part of your question, I don't think that opportunities will entirely offset the risks. It's the same as with climate change. I mean, you can reduce your carbon emissions, but you can only offset a certain percentage. I think the SBTI recommends an offset of only 10% of your carbon emissions, your financed emissions as well. So I don't think it's entirely possible to offset. I think a lot of damage has already been done, and those are irreversible. So, but that doesn't mean that we shouldn't be looking at opportunities.
Madeleine, just a final question, which if I can ask you to answer this quite quickly, it's a complex thing though. Elizabeth made the very important point that we need to look at nature and climate together. And I think that's what you're also doing at FirstRand, isn't it? You're trying to say this is going to need capacity, and we need to look at the climate and nature risks together and work out how we're going to tackle those. Could you just say something super quickly about that issue? Thanks.
Yes, so that's definitely the process we're going to be following to link nature into the climate conversation. I think the climate conversation was easier for us to have because it's already tied to a financial value, and we're getting our minds around quantitatively expressing climate risk. It's far more difficult to do for nature. And in the continuing work that we're doing with FSD Africa, we're now really having to work very hard to understand the concepts of sector and location based, and then looking at specific conditions, protected areas, biomes, or so on in the surrounding area. So I have found, having the conversation with the same teams, they look at me blankly. So I do understand that we're going to have a lot more awareness raising. We are in the fortunate position that we have 4 ecologists in a specialist team. I understand that other banks don't have that. And I am particularly concerned about the fact that, the African banks may not move along swiftly enough because we don't have the capacity and expertise on board. And I even hear the European banks looking at appointing ecologists. I'm currently recruiting, and the skills are very scarce.
Yeah. No, well, look, I hope we will be able to come back to that very important question of capacity in just a minute, because, obviously FirstRand is one of the very largest banks on the continent, and there are many that are really much, much smaller. So I think that's a very good segue. Let me turn now then to Simon for now. Simon, you're the chair of the Finance for Biodiversity Initiative. Could you tell us very briefly what your organization does first, and then can we have the discussion about that transition risk? If we accept that financial institutions like FirstRand are going to start incorporating nature risk into their financial decision making, what are the possible consequences for Africa as a whole? How do you see this playing out? And how should we best manage those trade-offs between protecting nature whilst preserving sustainable livelihoods? So Simon, over to you.
Happy to. And if Denny figures out the sound, then feel free, Mark, to interrupt me, and I'll just sort of pause and wait until Denny has made his comments. So firstly, actually, if you don't mind, I just actually wanted to congratulate FSD and McKinsey and others for this work. Having been involved with the TNFD since, actually, formally speaking, before it started, and seeing the pace and quality of work and the number of different actors that are crowding in into TNFD, I think it's really great that this, amongst a number of initiatives, is beginning to explore how that might play out in different kinds of economic and, of course, nature contexts. And that's exactly what Robin's summary seeks to describe. So I think congratulations need more. Fantastic. So secondly, F4B, Finance for Biodiversity, set up at the end of 2019 with a mandate to increase the materiality of nature in financial decision-making. Now, one strand of our work is, as I've indicated, working with TNFD and other actors that are focused on, if you like, information, risk management, asset pricing, disclosure, and other forms of communication within financial markets, what we would call the market efficiency end of increasing materiality. But of course, there are many different ways in which to increase materiality of nature in financial decision making, and some of them are a little harsher, such as regulation. Some of them are a little bit more exciting, such as innovations that are going on in sovereign debt markets that we're very involved in. And some of them, frankly, are to do with the way in which citizens respond as consumers, as investors, as savers, and as voters. And so F4B covers the full spectrum of different possible routes in which nature's materiality can be increased in both, it has to be said, private, but also public financial decision-making. Now, coming on to the next question that you've asked, Mark, and do interrupt me if Denny figures out how he can make some comments. Perhaps a couple of remarks. So obviously Madeleine's comments about the importance of building nature risk in, the way it shapes different risk pricing across different sectors and therefore parts of FirstRand's portfolio, all obviously not things that I would seek to repeat, question, change, challenge, edit in any way. But maybe I can kind of add in another couple of pieces which might merit a response potentially by Madeline, but also potentially by Robin, given that he's sort of under the hood of the actual research that was done. I'm going to take first an example from Brazil, but I think it makes the point very effectively. So regulations in the EU that require companies to undertake deforestation due diligences, particularly along long-distance global supply chains, for example, into the Amazon, are now being followed up by threats from the EU to ban the importation of soya and beef if there is evidence that they are associated with deforestation. Now, perhaps rightly, Brazil has pushed back and argued that this is a non-tariff trade barrier and that they wouldn't find this way of dealing with nature acceptable. But we can clearly see applications across the African continent equivalent, where not so much issues to do with, say, a particular bank's portfolio sitting in South Africa, but issues to do with the way nature risk is being integrated into financial decision-making, begins to create much larger impacts, or at a minimum, begins to create for investors much greater perception of risk. Today, as a second example, FB issued a piece on the implications of integrating nature risk into sovereign credit ratings. And we produced the first quantitative analysis across 8 countries, including a number of countries in Africa, taking account of the World Bank's sort of nature trajectory analysis. So we drew data elsewhere for this. The implications are astonishing and potentially huge in that if nature is integrated correctly into sovereign credit ratings and nature's destruction continues, then the cost of capital to many countries in Africa will rise even further than it is today. And of course, that will reflect itself on Madeline's balance sheet and may not be, question for Robin more, may not be part of what has been taken into account in a sort of direct portfolio nature risk analysis. And then just one on the upside, I take Madeline's point that it's easier in a way to monetize climate risk as it is nature risk, but it's clear that there are huge opportunities emerging, and I don't want to miss that out. Vertical farming, alternative protein, many different ways in which farming systems will transform are not simply investments that are going to be made in Germany or outside Shanghai, but are investments that are going to happen across the African continent as well. And food, if you like, is the principal target for responses, investment responses to nature-related risks, because food is the equivalent to nature as, if you like, energy and therefore mobility and property build is to climate or carbon in particular. So I see much larger upsides, but they require significant shifts in the way in which we understand the development of the underlying sectors. And the food sector is probably the most important case in point. So really to conclude, Mark, and pass back to you, hopefully to Denny, I think it's interesting to see the analysis as it looks from a specific bank balance sheet across into an economy, potentially taking that to a sort of aggregated financial sector perspective, but still at a domestic level, and then to compare that to the effects that are more likely to occur when one takes into account broader international developments that will lead to significant changes in the cost of capital associated with nature risk incorporation and potentially spillover effects into trade policy and export performance. Back to you. Thank you.
Yeah, Simon, that's great, and very valuable comments there about the indirect impacts. I know that the research does indeed refer to indirect impacts, but perhaps more from a sectoral point of view, actually, sort of the indirect impact sort of via the sector pathways, but I think it's very important to highlight the if you like, the macro or these almost the exogenous issues that are going to feed through into actual financial impacts at a firm level, and indeed for society as a whole. So we're going to try and go back to you, Danny. Danny, are you with us?
I am.
Fantastic.
I hope you
That's
can hear
wonderful.
me now.
We can hear you loud and clear. And just to go back to what Simon was saying, we're going to go for zooming out from the financial institution level to the system level, and then we can return to Simon to talk about the macro picture in just a minute. But Denny, I was asking you the question about Zambia's, when you look at Zambia as a whole, not the financial system, but the Zambian economy, and the transition risk that the Zambian economy is facing because of its exposure to nature. I'd love to hear your thoughts on how you think the country will manage that. Thank you.
Thank you very much, Mark. Sorry for the short break there.
No problem.
Really a pleasure to be with you, and for the invitation is greatly appreciated. As even the study that Robin and the colleagues undertook shows, Zambia comes out not very well in terms of the impact of nature, and the climate change is quite obvious. I mean, we are quite exposed in the agriculture sector. We see that we also, like energy, we depend a lot on the hydro. So in the recent past, I mean, we have had the situations where we have flooding in one part of the country and the drought in another. So this year, for example, I think our crop output is low, but that also has its own issues in terms of the intensity of use of the land. We have a lot of issues going on in degazetting forests, which is going on. And then you have forestation, because the access to clean energy or energy in general is very low. So people are resorting to using charcoal, which is creating other problems. So really, the challenges that the country faces are enormous, and the government is trying to address some of these. So one of the things that the current government has done is, at the highest level possible, the president established a new ministry of green economy and environment. So I think that's trying to set the tone at the top in terms of the challenges that the country is facing. And then the country has also been making efforts to domesticate some of the international agreements on their sustainable development goals. So that is drilling down to the private sector as well. I think, as Elizabeth observed in her opening remarks, the private sector is doing quite a lot, but is that enough? I guess that will be the end question we have to answer. But we see that a number of corporates really are doing something. One of the things we see is that, working with the Worldwide Fund for Nature, they are trying to improve irrigation systems. They are trying to conserve some of the special areas, like in our Kafue Basin. I think there's a big project going on there. We see that in their corporate social responsibility, a number are including some aspects of conserving nature. Is one of the big mining companies, for example, is doing some water purification around this thing and restocking fish for the communities around. That's all to give the protein and also to stop them from perhaps scavenging from the forest. Now, for the financial sector, some of the work which is being done, like our colleagues in the Securities and Exchange Commission, they have come up with what you call green bonds guidelines. We are also in the process of developing green finance guidelines, but the work is enormous. So the research findings that come out here are very helpful in actually pinpointing some of the areas or the issues that we need to do. I think agriculture still forms part of a major component of our exposure by the financial sector. I think like Madeleine said, I think we are no exception here. And we see that a number of non-performing loans are also in that particular sector. So there is quite a lot.
May I just, sorry to interrupt, but may I be very rude and sort of put you on the spot a little bit as a regulator? So you've spoken a lot about the interesting market development things that are going on in Zambia, the green bonds and so on and so forth. But your job is also, I'd like to hear from you in your capacity as regulator, and you're looking at regulating the financial system. Do you think first of all, that it's feasible to regulate, to regulate in a way that asks your financial institutions to make those disclosures around nature mandatory? How realistic is it? And you know, we've all lived through sort of globally inspired initiatives like Basel III and so on and so forth, which have caused significant problems for the African financial sector in terms of compliance. So I'd love to hear your thoughts on the feasibility and perhaps the timelines for that thing to become mandatory.
Maybe I would want to first of all draw a distinction between, for example, the Basel III and the nature and the climate issues, because they all, the latter, actually speak to our very existence. So one would like to think that the attitude towards that would be slightly different. But of course, from the research that has been done, that it does impact on the profitability and all of that, there's an incentive to kind of not disclose fully. But I would like to believe that working together is something that we must really push for, because it's not really an option, in my view. That this is something which, if we don't address as a society, then we are really headed for bigger problems. So using that as an entry point into the conversation with them, one would hope that the level of compliance would be somewhat much more. But obviously, really identifying the issues that they need to take on board as they operate is another level. I think you touched on the issue of capacity, both within the institutions and also from the regulator point of view, are very important. So what we are doing here, we have 3 regulators in the financial sector. We have ourselves here for the banks and some of the financial institutions. Then we have our colleagues in the Securities and Exchange Commission who are dealing with the capital markets. And then we have the pensions and the insurance. So we have formed a working group together to really work in a coordinated manner to address a number of these issues. So it is our hope that by doing that, I think we would resolve some regulatory arbitrage that could emerge in the process. But obviously, a lot of work is needed to pinpoint the issues that we need to address our attention, because this thing is ongoing. So research of the type that has been done is extremely important. So this one would like to believe it's the first cut. We must go on to do some more of this, and the coordination among other players is extremely important because here we are pushing perhaps what you may term as a public objective function, and then you have one who is pushing a private objective function. So sometimes those do not quite work together, but we have to find a way where there is some convergence and be able to preserve our environment, because we all need it. So I think that's the that incline, if you will.
Great.
We will have to push.
No, well, thank you, Denny, and I think we can all be grateful for Zambia's leadership on this one, actually. So thank you for lending us your financial system in the way that you have, and for leaning into this research. I think it's very valuable for all of us. And what you said on the phone the other day, which is the importance of starting, really. I think that is a crucial thing, and it's great to hear all the actions that are taking place in Zambia. So thanks for that. I'm going to go quickly back to Simon. And Simon, if you could maybe, so it's ridiculous, but if you don't mind trying to answer this one quite quickly, maybe to the point about, TNFD isn't the silver bullet. No one's pretending that it is. And indeed, there are question marks around whether disclosure itself is really going to lead to any material action. So let me ask you something slightly controversial, which is, firstly, do you think it's going to work? Do you think it's going to make a difference? And secondly, what are the other things that need to complement TNFD in the long run to have the kind of impacts that we're looking for?
Well, as a senior advisor to TNFD, I think Elizabeth would chase me down if I said it wasn't going to work. And she's, I know, looking at me very carefully at this point. So I'll use my words carefully. So, of course it's going to work, but what does that mean? Yeah, it means that the financial community will hopefully much faster than the growth of integrating climate risk begin to integrate both nature-related risk and nature-related risk, including its interconnections to the climate agenda. So as Robin indicated in his presentation, the right answer is not nature alongside climate. That's the wrong answer. Yeah, and the reason we've got TNFD is that there's a lot of work to do to figure out the nature piece. But ultimately, if I'm Madeline or anyone else, yeah, I'm saying, don't tell me I'm running a stereo system here. I have to figure the integrated play in dealing with nature and climate risks and opportunities. So that's number one. Number two, so that will happen. Yeah, and that will happen relatively quickly. I'm optimistic, although as always, the future is unevenly distributed. But to your point, Mark, there are other things that need to happen too, and I just want to illustrate. So a significant portion of nature damage arises through nature's interaction with the food system with intervening criminal activity. Yeah, and this isn't a comment on a particular country or a particular place. It's just looking more broadly at the evidence. Nationally, internationally, the Financial Action Taskforce estimates that environmental crime globally is worth $280 billion a year. Yeah, and that's before you look at the impact on nature. And that's before you look at all sorts of other things. So it's the fourth largest source of illegal funds globally. Yeah, and so if we can address nature crime, we make a big difference in how financial institutions understand risk, back to the risk story, and how financial institutions understand the relative attractiveness of nature-light investment opportunities. This isn't the environmental community that's going to do this. This is Interpol. This is Europol. This is the global financial crimes community. It'll be more to do with anti-money laundering and initiatives like conflict diamonds than it'll be to do with classical risk analysis. Now, that's simply to illustrate, Mark, that there are multiple plays on the table and they interconnect with each other. If we make a significant impact in making nature crime less profitable and more risky to the financial community, then Robin's numbers will begin to change quite a lot and in the right direction. And the effect on whether it be First Round or any other financial institution's consideration of nature, risk and opportunity will shift. So I think there are multiple activities in play. Some of them are regulatory, some of them are legal, some of them are to do with public subsidies, as we know, and some of them are, back to our knitting, to do with getting the right data, approached by the right people who have the right risk management tools and can communicate it in the right way. All of these pieces are part of a jigsaw that can really make the difference.
Thank you, Simon. That's perfect. And yeah, that's excellent. Thank you very much. I'm going to turn now to Hanan. Hanan, this is Dr. Hanan Morsi. You're the Deputy Executive Director and Chief Economist for UNECA, and you're our partner on this exercise. And I do want to recognise UNECA's role in this, and to thank you on behalf of FSD Africa for your involvement in this. It's great to have you alongside us. You've been very patient listening to the speakers. So maybe first, would you like to just to give your reflections on what has been said, and then I'll ask you a question. How about that?
Sure, thanks, Mark. Good morning, everyone. I think it has been a fascinating discussion, and especially to get the views of the multi-stakeholder that such ambition would take, because it's really one of the major challenges that is facing the continent, and also one of the major opportunities that the continent also can benefit from. So engaging with the private sector, financial sector, and regulators will be at core. And it really links well with kind of, the things I wanted to even, bring to the discussion in terms of you've built it from the bottom up, kind of looking at the private sector, the regulators, and then how do we take it nationally, would be an interesting point to perhaps elaborate on later.
So you're in a unique position as UNECA as a sort of convener, and you're linked to all the global institutions that matter, and yet you're rooted here in Africa as well. So we have what I'd like to ask you first actually is around the idea of supporting the development of national nature strategies, which is something that is potentially linked to the post-2020 framework of the CBD. If countries were to develop these national nature strategies, how do you think that would contribute in a practical way to the kind of concrete outcomes that we're hoping to see emanate from this kind of research?
Yeah, I think there is, a risk and opportunity that is intrinsic to nature in Africa. And while we have the majority of the wealth being derived from natural resources, the fast degradation of nature due to climate and other risks diminish future earning potential dramatically. Yet nature is insufficiently reflected in national strategies and in national budgets. And even within countries' nationally determined contributions, the opportunity and risk associated with nature is not properly reflected. So all this also mean that for the private sector, financial institutions, they're not able to reflect the real role of nature in economic development or in climate resilience. And ECA has done a number of actually studies in terms of green recovery studies that have shown that there is great positive return from investing in nature. And I'm just gonna mention a couple of examples here. So in DRC, a return of up to 450% is possible by investing in irrigation and associated adaptation measures. In Kenya, a return of over 200 is possible from the use of resilient seeds in agriculture, and similar returns are also possible by rehabilitation and investing in natural parks. And there are other examples. So investing in climate resilience through nature positive agriculture reduces long-term also in building adaptation, and the cost of doing this is rather limited in terms of, it's estimated at about $15 billion, which is small relative to the cost in comparison for the estimated of over 200 billion annual cost for paying for disaster relief and recovery. Really, the having nature strategies will provide the opportunity to reorient the economic model for African countries for more sustainable growth. It will really help identify investment pathways and opportunities, help in build and protect natural assets, and also help with the link between nature and wealth creation. So I believe some of the goals of the Convention on Biological Diversity around protecting natural environment can be actually contextualized in doing these nature strategies in terms of immediate and long-term returns on investments that they will provide. So empowering countries to develop national nature strategies will create one enabling environment to provide incentives to support public institutions, including central banks and private sector, to align and move toward harmonized consideration of nature. And also it will enable better information to integrate nature-related risks and opportunities in terms of strategic planning, risk management, and asset allocation decisions. So I believe that Africa's reliance on nature is a source of vulnerability, but potentially also a competitive advantage, and that's really what is at stake.
Yes, and Hanan, when you were talking, it also made me wonder whether these national nature strategies would help to break down the silos that often exist between ministries in environment and finance ministries as well, so that you get a more sort of integrated approach to more of an integrated solution really to solving the problems that we have. And just to record, we are looking to work with UNECA on these national nature strategies in the future, and we're looking forward to that. So you said something earlier about bottom up, and I just want to come back to your point and maybe explore that a little bit with you. Again, you are a big organization, you're connected to everybody in the world and so on, but you also recognize the importance of bottom up work. So we understand about global knowledge sharing, and certainly I believe TNFD and indeed the banks in the North can learn quite a bit from the African banks and what the African banks are having to experience, and obviously vice versa. But what would you say, Hanan, might be a UNECA role for facilitating the kind of bottom-up activity that we think the sort of TNFD exercise would require? What could you do practically at a kind of from a bottom-up perspective?
Absolutely. I think that the task force on nature-related disclosure will be a critical part of the sustainable finance architecture, and ECA will support this process by providing tools to allow countries to evaluate the return on investment, which is derived from nature-based investments. For example, we have developed a blue economy toolkit, which allows countries to better reflect the contribution of their oceanic and water resources on their economies. When this toolkit was actually deployed in Seychelles, it showed that a third of GDP was derived from the blue economy resources, and that it contributed toward 45% of all jobs. This is critical information for investment decisions that government and private sector have to make. ECA is also working to help African countries increase the flow of finance directly related to the preservation of nature. the role here of developing carbon credit markets for Africa will be a critical role. Africa remains the largest continent. It's home to 60% of arable land, and Africa is also one of the most important regions in terms of carbon sinks. The Congo peatlands sequester equivalent of 3 years of world total carbon emissions. And these peatlands are the second largest carbon sinks in the world after the Amazon. So ECA and Dalberg estimated and demonstrated that African countries could actually meet 30% of global sequestration needs by 2050 using nature-based removal. And actually, if the price of carbon credits can increase to around $50 per ton, African countries could mobilize in excess of $15 billion a year and generate 30 million livelihoods. ECA is currently supporting the Climate Commission of the Congo Basin to create high integrity measurement of greenhouse gas emissions with a view to create standardized and harmonized protocol.
And thank you so much. That's great. And we've got a little bit of time left for Q&A, not quite as much as I had hoped, but we do have some. I want to sort of pose one question that's come through from the audience back to you, Madeleine, if I may. And just to ask you about the relationship between TCFD, Taskforce on Climate Financial Disclosures, and TNFD. What is your experience of TCFD, and what can we learn from that in relation to TNFD that we could then do better?
So there are many areas that are similar. So the TNFD was written in the same format as the TCFD for ease of reference into the 4 chapters. And that is quite helpful to drive the conversation for the TNFD. I think slight differences is that in climate, we look particularly at sector exposure, where we all know that there's a large differentiator in terms of location, so where your operation is located and how it impacts the surrounding nature in that particular area. So, for instance, we'd have to look at a drought scenario for farmers that are located in very dry areas. But I think what the TNFD has tried to do is to make a practical or to present a practical way of doing a risk assessment by having you ask the questions about location. In general, I think the work that we've done with the TCFD and the deep understanding that we have of the TCFD has made it so much easier for us to participate in the TNFD and the working groups of the TNFD. We experienced some data challenges in climate-related work, which we are now investigating. So I'm in a specialist working group on data. And we've investigated some tools that are nature-related, specifically OnCore and IBAT, to name but a few. So it's different, and yet it's the same. I mean, what Simon was saying before, the financial impact is the same. We'll use the same methodology of identifying materiality and financial impact. And I particularly liked Simon's comment on financial crime or nature crime. We are watching that, but I don't think we are reacting as we should on that. But generally, you know, this program nature is not new to FirstRand. We've been managing biodiversity and conservation and so on for a very long time. The impacts, I think what is different for us is looking at dependencies.
Yeah. Okay. Brilliant. We're sort of coming close to the end, and I just want to ask everybody, ask an open question, which is, what would you like to see happen next? What's the one thing you would like to see happen next? And if I can perhaps ask you to answer this super quickly, like in, you know, maybe 30 seconds to a minute maximum. What would you really like to see happen next? Is it more research? Is it more facilitation? Is it policy change? What's the one thing that you think would be really catalytic to help get us to the next level? And Elizabeth, I might even ask you to come in and say your piece. Just one thing out of the many things I know you would like to see happen, but just one thing in 30 seconds, please.
I will say all of what you are mentioning, because Africa or the countries are not at the same level. So there's a question of capacity, a question of awareness. Before then they can move to policies, and question of sharing to enable them then to be able to learn and upscale. So all of those in view of...
Okay. So we're going to be busy. All right. Hanan, what about you? What's the one thing you would like to see coming out of this?
It's very hard to limit it to one, but I would say I would like to see more opportunity for finance to help preserve nature. I'd like to see more, debt for nature swaps. I'd like to see, better functioning carbon credit markets that allow Africa to benefit from, the carbon sinks that the continent have. So these are the type of things I'd like to see more of.
Sounds like actual transactions. That sounds very good. Simon, one thing.
Yes, I'll actually follow on from one of Han's points. I think Hanan had 3, so she cheated, but that's okay. Which is so much of finance, particularly formal finance on the continent, is determined by what's happening in sovereign credit markets. Yeah, it shapes sub-sovereign costs of capital in multiple ways. And so we have to advance the place of natural capital linked to climate in sovereign debt markets. And that will have the largest systemic effects on how international flows see both the risks and opportunities associated with the continent.
Thank you. Denny, are you still with us? I wonder whether you'd like to.
Yes, I am.
Wonderful.
Can you hear me?
Well, what's the one? We can hear you. We can't see you, but we can hear you. Yeah,
okay.
Perfect. So we can see you.
Okay. Tough one. I might cheat as well, but perhaps I would lean on more on financing with the aspect of technological development, because some of these things, to be able to tackle them, requires technological advancement. So if we can mobilize enough financing, that can make that happen. So, but somehow I have to cheat. Facilitation of this still remains a very big work. And that's where I think your institution, Mark, comes into play. And the UNECA, I think their role is extremely important. So to really get the market working for carbon, we get the financing and be able to bring all these technologies to be able to respond to that, because the cost of some of these transition issues are quite high. So adoption definitely becomes challenging without the financing. Thank you.
Perfect. All right. Thank you so much. Robin, 10 seconds. 15, maybe.
Well, since we're talking about the implementation of TNFD, I think it'd be fantastic if regulators were to set out what the evidential hurdles are that they require for them to then move forward and make commitments to introduce these things. So what are the tests that they would apply to say it's now ready for us to move forward? Because then, those of us who work in this area can assemble that information.
Okay, brilliant. Well, listen, thank you so much to all our speakers and to the panel, and for those great thoughts, closing thoughts. The reason I wanted to end with that question is because there is going to be a next step, and we need to carry on, and there's lots of work to do. And one of the platforms that we have set up in order to carry that work forward is the African Natural Capital Alliance. And I'm going to invite Kelvin Massingham, who's a colleague of mine at FSD Africa. He heads up our risk and resilience pillar, to tell us a little bit more about that. But I just wanted to say thank you very much for attending from my side, and goodbye from me. And over to you, Kelvin.
Thanks, Mark, and thanks also to our distinguished speakers for your valuable insights. I think it's been a very interesting discussion, and I think we've heard a couple of important things. I think we've heard that nature-related risk and opportunities in Africa are material. We've heard that it's possible for African FIs to assess, quantify, and therefore price nature-related risks, and to do this in an integrated way together with climate risks, even with the data constraints that exist within Africa. And so that provides then a model for how the rest of the world can do this. And it was interesting to hear a lot of the closing comments and asks were on the finance industry. And so we've also heard that the finance industry has an important stewardship role to play in the transition to nature positive, and that there are real opportunities to take advantage of in this process. But as Mark says, my job in closing is to talk about next steps in response to all of this. And we believe that there are two particular things that are really important. The first is collaboration, and the second is action. And it's with that in mind that we have formed the African Natural Capital Alliance, or ANCA for short, in partnership with UNECA and with TNFD. And the Alliance is an African-led collaborative forum for the financial industry in Africa that exists to mobilize action, mobilize response, and provide leadership in managing our natural capital. And we do recognize, even as we've seen today, that nature is a fairly new topic. It's fairly complex, it's wide-ranging. And so for many organizations, you're at the beginning of your journey of grappling with this topic. And so we wanted to help ground the response in tangible and understandable actions. And so whether you're a financial institution, whether you're a regulator or policymaker, or part of broader civil society, our invitation is to work together on practical steps to build a nature positive future. And so for financial institutions, the primary offer really is an opportunity to pilot the emerging TNFD framework and to contribute an African voice in shaping the development of the framework. And that's supported by best-in-class technical support that's funded by FSD Africa. And we already have 5 leading financial institutions, including FirstRand, who are actively piloting this with us. And it's also an opportunity for you to be at the forefront of change, to drive change and to demonstrate leadership on what for Africa is an important topic. And for regulators and policymakers joining ANCA, it's also an opportunity to remain in lockstep with emerging global ESG standards, to gain access to a global forum of peers, to learn from and to plan ahead, and to set a roadmap so that the industry understands kind of your plan for a transition to a nature positive economy and society. And we also know that, for many African regulators, like Denny, for example, for you, you're still at the early stages also of incorporating climate guidelines into your sector. And so this provides a great opportunity, as we've been talking about, to consider climate and nature together, which is really important. And lastly, for NGOs, other development partners joining ANCA is an opportunity to leverage a credible platform to advocate for the significance of natural capital in Africa and to contribute to shaping these practical solutions that we really need. And so together with UNECA and TNFD, we warmly invite you to join us in this alliance to work together to preserve and grow our natural capital. We already have 13 leading financial industry stakeholders as part of the alliance, and we're looking forward to welcoming many more of you as well. As a next step, you can reach out to us at anchor at fsdafrica.org, and we'd be very happy to chat further. And you can also access more information via the website, which you can get to by scanning the QR code on the screen. But with that, I would like to also just add my thanks on behalf of FSD Africa for all of you to joining us today. It's been a pleasure to host this session. Thank you also again to all of our speakers and to our partners. And we really look forward to continuing to engage and collaborate with all of you going forward. So thank you very much.